point, we're about a $5 million company, market cap. My first financing was with Rule. Rick was the lead order for Kaminak in March 2006. He gave us, at that point, might have been a $2 million investment, but the point is we raised about $5 million. Kaminak started as a prospect generator, and then we found this asset called the Coffee Gold Project, which really transformed the company, and I'll talk a bit about that history. But the takeaway is that where you are today in life, at least from my perspective, is the sum of all your experiences. You didn't just get here by fluke. So having these experiences has guided me or guided our team to land on this project. This is not our first rodeo. In order to find a tier 1 deposit, you have to know what one looks like. And more importantly, well, or just as importantly, I should say, creating value for your shareholders is really why we're here. And I happen to be the second largest retail shareholder in our story. And, if we make money, obviously it benefits everyone. But we're here because we are passionate about what we do. And we believe this project has the merits to be another dot on the map. And when I say a dot on the map, I remember back in my early Kaminak days, I was speaking to several geologists. And there is a map out there that, if you get a dot, it means you found 5 million ounces of gold. And so I do have a dot on the map. I'm 1 for 1. And that led to that sale. So we'll talk a bit about the parallels, the experiences that we had, and how it translates to this project now that we're exploring called the Flat Gold Project. What you're looking at here on the far left, obviously you know what the far right is, that's actually a placer dredge. So that's placer gold's what's mined in the streams and creeks. And that actually is from the Guggenheim family. So the famous New York family, the Guggenheim Museum, their dredge has mined more gold than any other dredge in history, and that dredge was actually parked on our property. So 1.4 million ounces of placer gold from 1920 to about 2000 has been mined from our property. And again, another indicator or potential evidence that we're onto something significant. This slide is here for a reason. I do encourage you to take the time to read it. It's on our website before making any sort of investment decision in any company. So what we have outlined here is sort of the the Kaminak history from its inception to when it got sold for $520 million. And although this was a success story, there were many times when I was questioning the success of this company. We were doing all the things right. So this is when we went public in 2005. Our first public financing, that was with Rick Rule, that was at 50 cents. And so off we went as a prospect generator. And then this thing in 2008, the subprime mortgage fiasco happened, and our stock went all the way down to 6 cents. A lot of people were flying the coop, or fleeing the coop, if you will. But all that value creation that we did along the way was eroded within a matter of months. And we went from, at one point, this is when we were sort of the highest market cap in this period. This was about a $60 million market capitalization, and down we went to 6.5 cents. I distinctly remember actually calling Rick Rule in 2008. He was at this conference, but it was held in Vancouver, so that was in July. And he gave a presentation that was about value and buying exploration companies that were trading below cash. So I quickly called up Rick and said, hey, I heard your talk. We're a 6 to 8 cent story, and we have 14 cents in cash. What do you think? And literally, this is verbatim, and I'm being recorded so Rick will hear this. But the point is, as I was speaking to him on the phone and watching he goes, are you in front of your computer? I'm like, yes. And he threw up, I think at that time it was a 2 million share bid on the stock as I was talking to him. But here's the other interesting thing. This speaks to Rick and how value focused he is. He put up the bid. I saw it. He goes, do you see it? I'm like, I see it. It got hit. Half of it got hit right away on the phone, and all of a sudden it disappeared, the bid. Like, where'd you go, Rick? He goes, I just moved it down. And so he moved it further down. But that was I guess the point of that story is that things were pretty dire. In fact, we actually had a shareholder that was one of Rick's clients that committed suicide. He was from Texas, and I won't mention his name, but the point is he was heavily leveraged to the mining space and sadly took a gun to his head. The reason why I know this story as well is because the state called me and said, hey, we have a block that we need to sell. Can you help facilitate a buyer for it? And obviously I knew who the person was, but it was about a 5 million share block that he wanted to offload, the state wanted to offload. Again, Rick got a call, and a few other of his brokers at that firm got a call, and thankfully one of them picked up the allotment, and off we went. But that story quickly transformed from an 8 cent or 6 cent stock to now a 15 to 20 cent stock when we acquired this coffee gold project. It was a golden soil anomaly, never been drilled before. It was in the Yukon, and I wasn't necessarily a big fan of the Yukon. Low-grade, bulk tonnage deposits that were sitting around for years weren't really moving forward. But this soil anomaly caught our eye because to the north was a brand new drill discovery that looked different than what the Yukon typically produced. So off we went. The next raise was about 40 cents, believe it or not. We put out some great trench results. And before you know it, our stock started to climb. And in 2010 is when we actually put the first drill hole into this thing. And we actually hit on the very first holes. 17 grams over 15 meters. Off, our share price catapulted all the way up to almost, actually over $4 a share. And guess what happened? Right back down. And so this is what the junior mining space can offer, but also being a publicly traded company, you're exposed to things that are out of your control, like the subprime mortgage fiasco. In 2013, before I get there, I'll just say in 2013, gold collapsed $400 in one day, and we put out our maiden inferred resource estimate. It was 3 million ounces of gold. Our stock at that point was probably about $1.20, and guess what? The slide continued. And again, this wasn't necessarily Kaminak specific, it was the sector. And that's what we've outlined here is the TSX venture. You can see how it was trending down here. But we're still putting out value or creating value for the story. And then the next major milestone for the company was a preliminary economic assessment. That's your first ever engineering or economic study done on a project. And that led to us being, we felt we were very exposed to a potential hostile takeover. So me and the CEO decided, okay, what do we want to do? We decided to bring in 3 billionaire mining legends. The first two, I should say, we invited them up to site, and that was Ross Beatty and Lucas Lundin. And after a canoe trip down the Yukon River and an overnight stay at our Coffee Gold project, they called us a week later and said, hey, we want to invest in your company. And this was the first time Rick and Lucas co-invested. I believe to this day, they've never actually done it mutually. Lucas sadly has passed away. But the point being is we brought in 2 billionaires into our stock, had a very robust PEA, and guess what? Our stock went down again. It went up and then went back down. So now we're sitting about the 72 cent price range. Our stock goes down to 60 cents. I'm literally pulling my hair asking, what are we doing wrong? We just brought on 2 of the most well-respected mining investors alongside Rick Rule, mind you. So we got Ross, we got Lucas, we have a 3 million ounce inferred resource, we have a PEA, and the stock goes down again. But we were shielded and protected, and that's one of the key things I think that I took away from that experience is like always align yourselves with people that believe in the project, but also believe in the management's ability to execute. And I always say, like everyone on this entire conference floor is going to tell you they got the best team. It's like everyone talking about the kids. More often than not, everyone's got the best kids out there. But the true grit, or where the road hits or the rubber hits the pavement, is when you survive these terrible times. You know, anyone can look good in a bull market. Show me how to make money in a bear market. And so in 2008, we were able to acquire a project, and also we had about $5 billion in cash at that point to endure the terrible 2008 crash. 2013, inferred resource, we were able to attract 2 billionaires into the story. These people don't just randomly invest into things. And so because of that opportunity, we now have access to them going forward. We've made them a lot of money. The third billionaire that joined us was Tom Kaplan, or Electrum. He actually got in at just slightly lower than Ross and Lucas. And then we produced that feasibility study, and you can see us here starting to pull away from the broader TSX venture decline. And then we had 3 major mining companies bidding on us. So that's kind of the share price performance or the history there. And we'll talk a bit more about some of the geological parallels. But again, the key thing that I wanted to bring forward here today is that where you are here is because of the sum of your experiences. And this was an experience in the corporate development world and how to shield yourself and how to create value in a terrible market. And now we'll talk about some of the other things. So Kaminak was a success, but like I said, there was very challenging times. And so what I took away from that is that, don't underestimate what a golden soil anomaly can deliver. There's 1,000 companies out there that have drilled golden soil anomalies. They don't always hit. Why did this one, what was different about this one? It was really the fact that this was unglaciated terrain. And what that means is that when you take a soil sample, you're actually sampling the mineralization below your feet, or it's reflective of a deposit below your feet. That's not always the case. So the soil anomaly is the surface expression of the deposit below. The other interesting thing is about coffee. It was part of the famous Klondike gold rush. Over 20 million ounces of gold has come out of the Klondike. The source for that gold has always been questioned. And so we think coffee is one of the contributors. We developed a business model that started with being a prospect generator and then transitioning to, hey, we want to run with coffee 100% ourselves. And so why did we decide to do that? Well, it was a value proposition, risk versus reward, and that's the strength of another team. If you're Barry Bonds or Tom Brady, you want to get on the field and perform. You don't want to always hit a bunt or get to first base. I want Barry Bonds to swing for the fences, and that was the analogy I used when I went to Rick and said, hey, Rick, we're deviating from our business model because the team now believes in this asset. And Rick gave us the blessing, believe it or not, that exactly is how it went down. And we raised that capital and we drilled our first hole that Kaminak funded exclusively. Previously, we used other people's money. We knew we had something special. We knew that the risk proposition was worth taking, and off we went and spent $2.5 million, and we hit on that very first hole. It's always important to have a solid shareholder base, because the shareholder base will support you when times are tough. And in the Tectonic case, we actually have similar shareholders, I should say, that are supporting us when times are tough. We have this other saying that we started with Kaminak, and it was keep the risk in the rock. This industry is notoriously risky. We don't need any more risk. We don't need First Nation or Indigenous risk. We don't need political risk. Let's just worry about the risk that Mother Nature and drilling provides. Everything else is within our control, which is why we only typically work, we only have work, or I only have work, in jurisdiction where there is a clear regulatory and permitting process. It's pro-mining, pro-business. And that also applies when we go into communities. We consult with Indigenous groups or with communities before we even acquire a project. We want to make sure that we're not going into a politically sensitive area or an area that is not in favor of mining. And we also do environmental audits before we acquire a project. We don't do the environmental audit 3 years in, 5 years in. We do it before we acquire a project to make sure that there's nothing negative or any huge red flags that are telling us not to move forward. So these experiences and the team have shaped how we build this company from the foundational level, which is the team, and then how we conduct our business going forward. So I will say, we're not the exclusive team. The thing I will note with any discovery, it definitely is a team approach. Not one person can take full credit for any mineral discovery. So there's a lot of people that are outside of Tectonic that were also part of the Kaminak success, and that's worthy of noting. But Allison, Rip, and Armstrong, myself, Ira, we have 2 other people on the other slides coming up here. They were all part of that success. Ira Thomas is a soon-to-be mining Hall of Famer. She was the CEO of Kaminak. I was vice president. Allison was vice president. But collectively, this team that you see here, including this person here called Michael Roper, the reason why I know Mick is because he was 16 years with Agnico Eagle, and Agnico was one of the companies that actually put an offer on Kaminak. And the person leading that charge was Mick. So after that process was done, Mick and I formed a relationship, and he was announcing his retirement with Agnico, and I asked him to be on our board. So Mick, literally, going back to, you have to know what a tier 1 deposit looks like, in order to find one. That was his job at Agnico. So 30 million discoveries collectively, 18 feasibility studies. That's the most rigorous engineering or economic study a company has to do. A feasibility study is the foundation for your permitting process. What's the point of finding gold if it can't be permitted? 20 projects collectively, 16 mines, 3.7 billion in M&A transactions, and 2 billion in capital raising. We've highlighted here the different skill sets of the team. It's not just geologists that make a company successful. You need to have M&A, capital markets, permitting experience, ESG, and also obviously exploration or geological expertise. And going back to Dr. Richard Goldfarb that you see here in the bottom, the newest addition to our team, I would also encourage you to Google these three fellas here, Dr. Cornet, Dr. Ian, and Michael. They're part of a geological company called Tect. They have touched more projects than probably our collective team combined. Maybe not more than Rich here, but the point is they've seen every possible type of mine on this planet collectively. The reason why they're on my team, they heard me present at a conference, and Michael came up to me and said, "We think you have a mine. We want to be part of your team." I told him I couldn't afford him. He came back with an offer that involved a small amount of shares, $60,000 worth to be perfectly exact, and he also doesn't get paid. I mean, they have stock options. None of our board of directors at this moment, receive compensation, monetary compensation. They're here because they believe in the team. Mark Smith was one of the lead engineers at Kaminak, and the other lead engineer was Fred Leitner, who was also part of the Tectonic team, but sadly he passed away last year. So our team covers all the bases. I mentioned the shareholders being super critical. Doyon is a Alaska Native Regional Corporation. They're for-profit. They're over $1.5 billion worth. Their biggest resource deal is with ConocoPhillips. They actually funded themselves a $150 million oil and gas rig, and they said, "Here, Conoco, go use this to explore on our land." They also happen to be the largest landowner in the state of Alaska. Their land holdings are the equivalent size of France, about 12.5 million acres. The reason why I have this project is because of my relationship with them. So this flat gold project was sitting within the 12.5 million acres that they have. I approached them. I was trying to find another Donlin-esque, if you know what that project is. It's 39 million ounces. Nova Gold or Tom Kaplan are the current owners of that, or co-owners of that. And lo and behold, I reached out to them and said, "I know you have land in this belt. I'd like to take a look at it." And their response was like, "Oh, no one's gone in there in over 20 years. The last company to work it was this mining billionaire guy." I'm like, "Oh, I know a couple mining billionaires. Who might that be?" And he's like, "Oh, this Robert Friedland character." And I was like, "Oh, Robert Friedland worked this property?" He goes, "Yeah, back in the 80s with Fairbanks Gold." So, alarm bells start going off. Point being is that Fairbanks Gold actually discovered and advanced the Fort Knox mine, which Kinross has in Alaska. They were trying to find another look-alike, and lo and behold, they drilled this property back in the mid-'80s. And then in 1989, they had a small portion of it. They dropped the claims, and now here Tectonic is 20 years later. But if this project was in the public domain, we wouldn't have it. Doyon, the interesting thing about Doyon is that we're probably the only company I know of that actually has Indigenous sponsorship or shareholders. They've cut a check, several checks, over $5 million into our company. So we actually have Indigenous shareholders investing capital in our company, saying, "We want you to find a mine on our land." And I don't know any other company that does that in the entire mining space. Crescat Capital, serially repeat offender in the sense that they continue to invest in our company. They were a 10% owner. I presented this project to them, 20% owner. they increased their ownership by double. And then on this last financing, the CIO or CEO of Crescat, Kevin Smith, personally cut a check for $1 million in anticipation of the drill program that we're doing right now and the potential results that it may bring. The business model is a page. This is the Tectonic business model, but it's a page out of the Kaminak book. It's essentially all the things I talked about. One thing that I will add, or a couple things actually, is that, it takes just as much time and energy to find a 2 million ounce gold system as it does a 5 or 10 million ounce. So why not play big? The same thing applies for financing and for permitting. So we look at large scale gold systems because that's what the major mining companies want, and it's the exact same time and energy as it does to find a small scale. We then run it through our economic mine formula. What the hell does that mean? Well, basically, I try to identify, to use, maybe we're in Florida, Dan Marino or Tom Brady at the age of 10 or 12 or 15. You try to find that tier 1 deposit before anyone knows what it is. And we basically take an early stage asset and we put a mine on it, hypothetical, and we run it through this formula. So it has to have, what's the grade needed, what's the scale, and if it meets that criteria, we then make the decision to A, acquire it, and then we come up with a 3-year plan where the board holds me accountable, I hold my team accountable, and every year we're executing on certain deliverables that are tangible and real, and that way we don't get married to a project that, it becomes a sort of a fascination and doesn't actually deliver results. So we're actually on year 3 of this project right now, and we've executed each and every year. And right now we're doing our largest drill program to date. Going back to the parallels, what you're looking at here is the Tectonic Gold Belt. It's a well-known mineral belt, let's just say, that transcends from northern British Columbia right through to western Alaska. The Coffee Gold Project was in Yukon. It was within the same belt. Flat happens to be the exact same belt. And we'll talk a bit about Donlin. But again, some of the experiences from Kaminak was that we wanted to find a younger style of deposit, or one that was oxide or heap leachable. And there's a lot of benefits to heap leachable projects, lower capex, lower opex. But finding these large gold systems in sort of younger terrain was sort of the task at hand. And what drew us into Alaska was the mineral endowment, 7 producing mines in Alaska. At that time, there was 0 in the Yukon, better infrastructure. And also, we wanted to work directly with the native corporations. They own massive amounts of land, and we thought that a partnership on day one would be extremely advantageous and would be fully aligned in our endeavor or pursuits for that next tier 1 gold mine. And so you're looking at Alaska here. I mean, I won't belabor this too much, but it has, again, 7 producing mines, a very straightforward permitting regime. There's been 2 White House executive orders that have been released this year. The first one stating that essentially Alaska is going to be our go-to spot for homegrown resources. Every country in this world right now is looking at how to reduce their dependency on other countries for certain commodities or critical minerals. And if you're looking anywhere in the United States, Alaska is going to be the go-to place. So I believe, and we're seeing it right now, sort of a resurgence into this area. And we're one of the as far as I'm concerned, I believe we have one of the largest potential gold deposits. Donlin, that you see right there, that's a 40 million ounce gold system. 40 million ounces, the 5th largest undeveloped gold deposit in the world right now. And we happen to be 40 kilometers away in the same mineral belt. Did Mother Nature just stop at 1 and say, you know what, we're good with 140 million ounce, we'll leave it alone? We think we have that type of endowment on our property. The other thing, there's a lot of things like going back to risk and our business model, going back to that economic mine formula, it did involve infrastructure. Well, this was the Coffee Gold Project. We did not have a power grid. We did not have infrastructure or a road that you could drive right to our site. What we did have was a commercial barge landing site, and we built an on-site road, on-site on the project, that was about 35 kilometers long to go from the barge site to the various deposits. Unbeknownst to many people, not every gold mine is on a highway or on a road. They were at one point, but that's becoming harder and harder to do. So it's not a deal breaker by any stretch to be off grid. In fact, if you want to find a tier 1 deposit, typically nowadays you have to go off grid. Going to our flat gold project, so we'll be toggling back and forth between the coffee gold project and our flat gold project. But we have a Hercules capable airstrip that you see in the bottom left there. We also have a barge landing site nearby, and we have roads that go to most of the mineralized zones. And there's a picture, or there's a video of a Hercules plane landing on site. So we didn't actually have that capability at Coffee. That's the largest cargo plane. You can drive a couple Ford F-150 pickup trucks in the back of that. We landed 3 of those this year alone. It is, again, it's used a lot in the military, but we can actually land one of those things right at site. It's a huge advantage that the state has actually put one of these airstrips on our site. And so I think that would obviously benefit us from as we go forward and continue to develop the project. What does a 5 million ounce gold system that sold for $520 million look like? A bunch of colored dots on that's what you're looking at. So this was the initial soil map that was presented to us back in 08, at the end of 08 actually. And for scale, that was about 1 kilometer wide, but that's how subtle sometimes these things can be. And so golden soil anomaly in an unglaciated terrain. And so this was again, presented to us in 2008, 2009. It was actually at the Roundup conference. And then after our first year of soils, that's what transpired. So we started out with this soils. We knew that these soil anomalies were interesting. If we put a grid over that, could that turn into something significant? Is this 1 deposit? Is this 2 deposits? What's the story here? Well, we knew that it was important to flush these anomalies out further, and off we went and collected some more golden soil anomalies. Literally a shovel of dirt in a bag, and off you go to the next one, and you're doing this depending on the grid pattern, sometimes every 25 or 50 meters. So 50 by 100 or 25 by 50, just depends. So that was 2009. Now we're looking at 2010, more soil, so a total 15,000 soil samples. We're starting to see some trends such as this here. This turned into the Latte deposit. That was just over 1 million ounces. This blob here turned into Supremo. That was about 2 million ounces of gold. Then we had Kona, Americano, some of these other zones, named after coffee drinks. We started to get kind of cute and funny with it. But again, the footprint starts getting bigger and bigger. And again, our first drill hole was here in Supremo, second drill hole at Latte, and then Double was the next one. And what you're looking at here is these are the discoveries that we made. 1, 2, 3, 4, 5, 6, 7, 8. 8 drill discoveries. And in our first year, we did 6 discoveries. The second year, we came back and we added to it. But you can see here, our discovery hole, 17 grams over 15. Latte, 2 grams over 50. Double, 6 grams over 35. And off we went. 69,000 meters drilled here. Looking at this image again, soils and some drill discoveries. That translated into, those purple lines represent the mineralized structures, and your 5 million ounce gold footprint, essentially the bulk of it coming from Supremo, Latte, and Double. There's your scale 2Ks. There's your pit that we put forward in our feasibility study, and now fast forward to the flat gold project. So again, we called it Déjà Brew or Déjà Vu, but when I'm looking at the flat gold project, I'm seeing, again, shareholders that can support us, Crescat, we have the Native Corporation, the Placer Gold Endowment, Klondike 20 million ounces, our property 1.4 million ounces in a more confined area specific to this area. Those pink lines represent placer gold drainages coming out of our deposit, Chicken Mountain. But you have a 4-kilometer golden soil anomaly, also in an unglaciated terrain where every drill hole that has gone into the soil has returned gold. But you have a geophysical anomaly that's 6.5 kilometers by 5.6 kilometers. Is this akin to this in some ways? Are we onto something of at least 5 million ounces in size? I definitely think we are. The other interesting thing to note is that the placer gold endowment is not just Chicken Mountain. Each one of these blue circular shapes or anomalies represents an area that placer gold's drained out of, and also represents a potential deposit. So we see evidence for 6 deposits. That placer gold is literally coming out of this hilltop here. It's called Chicken Mountain. It's not a mountain, but placer gold's draining out of that. And to date, at Tectonic, and historically, Friedland and one other company, 86 holes have gone into this, and every hole has hit gold. So we have a 100% drill success rate, telling us that the soils are actually reflecting the deposit below your feet. Here's some of the drill discoveries that we've made, and a historical discovery as well. We're drilling in this Alpha Bowl as we speak. We made a pretty significant gold discovery. We raised $13 million off of that hole. The interesting thing is, the title suggests for our next talk, we were a $25 million market cap company about a month and a half ago, or 2 months ago, and we closed the financing where we put $13 million in cash. So how does a $20 million market cap or $25 million market cap company raise $13 million? The goods, I'd like to say it's all because of me, but really it's yes, the team, but also this drill discovery really got people's imagination and got everyone excited that we're on the cusp of something significant. And again, that's just one area of this prolific system. The Coffee Gold Project topography, plateau, the Yukon is very similar to Alaska in many ways. There are mountains on both sides, but this is not a mountainous property. And going to our site, same thing, flat for several kilometers, pardon the pun. Our mineralization starts right at surface. This is also some of the discoveries that we've made, or drill intercepts that we've made to date. Historically, or tectonic, 12.5 grams over 24 meters. This is that area that we drilled that happened to be the source for 650,000 ounces of placer gold. This is the most prolific placer producing creek on our entire property. One of the most prolific in Alaska. And is the most prolific placer producing creek the best part of the system? Stay tuned, we'll answer that question by August with our first set of drill results. What does 3 kilometers of drilled strike look like? Well, this is our flat gold project. What we've done here is we've contoured the golden soil anomalies. Again, the soils over 4 kilometers in length. You can see a lot of them haven't even been drill tested. But what we have here is every hole hit mineralization, including our 428 meter long hole. There's our Alpha Bowl discovery. We take the cutoff to 1 gram per ton. You can see there's no shortage of high-grade material as well here. And then to put that into context with other deposits, including our analog, which is the Fort Knox mine, 9 million ounces has come out of this thing, 2 kilometers of strike, down to 500 meters. Then we have a snow line, which is another part of the deposit family, the same deposit model type. And then Donlin, 3 kilometers, which is the 39 million or 40 million ounce gold system. So if you believe in our soils, which are 4Ks in size, and obviously you get indications that this could be potentially double the size of one of these here. But even if you take our drilled strike and just infilling this, you start to get indications that we're onto something that's north of 10 million ounces. Metallurgy is the key for any project, period. It impacts every aspect of production. For those that don't know, metallurgy is how you get the gold out of the rock. Sometimes it's very complicated. In other words, very costly, energy intensive. The first thing we did at Coffee, first year of drilling, we did metallurgy to establish whether or not the gold was free milling. Came back with remarkable recoveries. What you're looking at here, we then followed that up with some heap leach column tests to see if the gold was heap leachable. These are insanely high recoveries for a heap leach deposit, some of the best results in the world right now. Fast forward to our flat gold project. Thankfully, we had historical drill core. So to my knowledge, we might be the only company that's done metallurgy before even drilling. And those results came back extremely positive, 97, 99% recovery. Then we did our first heap leach column test results. And again, going back to the Déjà vu, 96% recovery. That is a magnitude higher than this. And also at a coarser crush size. So if you look at all-in sustaining costs for any mining operation, how much you have to crush the rock to liberate the gold, that typically attributes to 50% of your all-in sustaining costs. So the less crushing and grinding you have to do, chances are you have something economic. This is done at a 3/4 inch crush, which is much larger than this 1/2 inch crush. Great results. There's just another zoom in on our recovery rates. For those, this project, our flat gold project, doesn't have to be specifically heap leachable. Having multiple ways to how to process or liberate the gold gives you optionality, and that's what you want in any project. But heap leach mines are extremely attractive. The reason why I know that is because we sold one for $520 million, and we had 3 companies, Newmont, Agnico, and Kinross, bidding on it. Finding those projects in the first world or in North America is extremely coveted. They're highly sought after. They're lower CapEx by magnitude, usually lower OpEx, much better on the environmental front. There's no tailings, no tailing dam, much simpler to set up. You don't have to bring all this equipment to site, and you can kind of get started pretty quickly, and you can process lower grade material. Right now, the biggest catalyst for us is our drill results. So we just launched a program about a month, sorry, I'm losing track of time here, but probably about a month ago. We have 3 drills turning. First set of results will be out in August, and then there'll be continuous drill results right through to the end of the year. Where are we going with this? Well, the 3 Ks of strike that we have right now, we think there's enough meat on the bone where we can justify putting, not only justify, but actually produce a very robust mineral resource estimate. That will be a target for next year. And this is conceptual in nature, and there's a lot of asterisks and caveats, subject to capital raising, things of that nature. But right on the heels of that would be a preliminary economic assessment, PFS, and then feasibility in the later half, and the holy grail of permitting, 2030 and onward. We're just starting to, believe it or not, although we're somewhat veterans in the space, this is really the first year that we've done a significant amount of drilling. Previous years, it's been 2,000 meters, each year for the last 2 years, very small programs. This is the first time we've drilled Alpha Bowl. We've got some great results that we've already announced from last year's campaign, the discovery hole, 65 meters of 1.5 grams with 6 meters of 6 grams, 1.5 meters of 27 grams. Currently, we have about $13 million in cash. We are spending a big chunk of that, 67 million shares outstanding. We're here all week, and if you have any questions, feel free to come out and reach out to us. Our booth is 40. That's me and our VPX. It's about end of October. No snow on the ground. Alaska's cold, but it's not that cold depending where you're at. We can work all year round. Currently, our season is typically April to November 1st, and with more success, obviously, and more capital, we would extend that season. So, thank you for your time. There is this presentation will be available. It is being live streamed and recorded. We're also doing a Q&A dinner with yours truly, Jeff Clark. The point of that dinner is for everyone just to kind of get brutally honest, ask any questions you want, whether it's about Tectonic. Jeff's got a fantastic newsletter and serially successful, and also has seen a lot of projects. So you have the opportunity to ask him anything you want. And so that, come by our booth or just scan that QR code to enter. If there's any questions, I think we might have some time to do a little Q&A. And if not, that's cool too. If anyone has any questions, you can raise your hand. We have a microphone that will be passed around. That's pretty easy. Oh, yes. How far from power? Far. Yeah, diesel. Yeah. The thing to note is that the Donlin gold asset. Sorry for the recording. The question was, how far are we from power? So the Donlin, or the Nova Gold asset, so Nova Gold and Paulson are the co-owners of that 40 million ounce gold system. It has all of its permits except for one. They've gone on record and said they expect the final permit to arrive in around 2027. If that project would get that final permit and they do a positive, go forward production decision, there will be power in the area. But we're not relying on that. That sort of for us is a bonus. Again, a lot of gold deposits are diesel operated. They don't have access to power. We can, So that's currently our situation. But the good thing to note is with heap leach projects, it doesn't require a lot of power. It's the lowest. We actually have a slide on our presentation. Heap leach mines are about 10 times less power consumption than your traditional mill or mine. Any other questions or comments? How about for Jeff? Anybody want to ask Jeff anything? Yes? We do not, no. So the question was, do we have an accelerator on the warrant from the last financing? And the answer is no, we do not. Yes? Well, the two White House executive orders, thank you again. I will repeat the question. Is there anything from the Trump administration that would shorten the timeline to production? Is that relatively the question? Yes. And so all I can say is that what pretty much is out in the public domain is that the Trump administration or the White House administration has issued two executive orders, and one of them talks about deregulation and making projects much more streamlined to get their final permits. So proof is in the pudding. We'll see if that materializes. But what I will say, aside from the White House administration, is that we're on native land. And our native landowner happens to be tied to the White House and one of the largest contributors to the state's GDP. They also happen to be our second largest shareholder that have invested $5 million in our company. So they actually own that land. We own the mineral rights through a legally binding agreement with them. And so we're fully aligned. So when we submit our application, our permit applications, it lands differently and it goes through a different path than a company that's not on native land without their support. So we think this is a much more streamlined, efficient process, and hence we will be able to get our permits in, I believe, in an expedited fashion. Yes?
In an unglaciated area?
Yes.
So that would be what you see in the soil is reasonable to say it's directly related to the subsurface bedrock.
That's correct.
And so if it's good soil results, then the conclusion would be it's going to be the source is right there.
Exactly. And just to elaborate, a lot of the Earth has been impacted by glaciers or glacier movement. So glaciers have scraped the top layer of the Earth's surface, specifically in northern Canada and throughout the States to some extent. But by scraping the top layer, and then you go take a sample in a glaciated terrain, sometimes you have to trace it back to its source. So there's a lot of areas where you drill underneath the golden soil anomaly, and you don't find anything below it. And so in an unglaciated terrain, and it varies from place to place, but in unglaciated terrain, those soils are in situ or intact or in place. And the reason why, so that's like geologically, you can look that up and come to that verification. But what validates it even further is that we've drilled 86 holes underneath golden soils, and every drill hole has hit gold. So now we're at a point where we have a lot of confidence in our soils. And one of the exciting things that we're doing this year is that we're actually going to take our drill at the end of the season and go test some golden soil anomalies that are outside of the Chicken Mountain area. And so that, does the same hold true in some of those other targets that are to the north. But that's essentially the concept is that when you have a proven exploration methodology, then you just kind of keep doing that over and over again. And right now, we're batting 100%. Yes? 99,000 acres.
What did you say your market cap was?
Well, our market cap was $25 million when we launched that financing. Currently, we are sitting at a $50 million market cap. $50 million market cap, over $10 million in cash, and visibility for something that is, 3 kilometers of drilled strike, and I'll let you determine what that actually means, but there's 86 drill holes supporting those 3 Ks. Yes?
Do you have any estimates on high grade?
the highest gold, yeah, do we have any estimates on high grade? We actually have real data. So the system through drilling has produced 211 grams per ton over 1.5 meters. That's the highest grade ever drilled on site. The highest grade we've personally drilled is 67 grams per ton. So there is high grade and there's low grade. And the thing with these systems is that they're notorious. Well, any gold system nowadays, you know, your average grade of a open pit gold deposit right now is about 1 gram per ton. It's actually probably now about 0.8. This was a few years ago, that 1 gram per ton. Your average grade for heap leach project is probably about 0.4. So heap leach projects, 0.5 grams per ton can actually be extremely profitable depending on metallurgy, crushing, mining method, deposit style. So grade is extremely important, but really it's all about margin. And you know, my goal is to demonstrate that this project, you can mine 0.5 gram per ton and still make money. And the Fort Knox mine, which is owned by Kinross, it's produced 9 million ounces. The average mineral resource grade is about 0.8, and the average grade going to the heap leach pad is 0.3. And they're making, their all-in sustaining costs are about $1,700 an ounce. Okay, well, thank you everyone for your time and for, thank you. Thank you, Jeff. And thank you, Rick, for inviting us to the conference.